Yeah, we just got a comment about Manulife, which is an insurance business. Actually, I'll use the US ticker because that might apply to our audience more. This is an MFC. Insight scores 3.43, decent, nice dividend on it. So this is a very interesting stock. Full disclosure, I actually own this stock. And I will show you why I think it's interesting. Sorry about my internet. It's always slow when I live stream.
It's all good. I'm making a note for myself to look at the Stone Co. this week because now I'm curious.
Okay, so Manulife is an insurance company. Now,
What type of insurance?
They do like everything, man. They're huge. They're
You know
also
that there's reinsurers? Like, I learned about this. There's insurance companies that insure insurance companies.
yeah, I know that. Brookfield actually has a reinsurance business. Shelby is telling me to tell, I believe, that we use Manulife insurance. We used it for this trip. Yes. Good hand signals.
Someone made a comment once. It was obviously a joke, but they're like, "I only invest based off of like Taylor and Shelby, who's our partners' opinions. They'll chime in on the show sometimes." So this has to go on that. We should make a watch list of those stocks. Actually, our portfolio.
But anyway,
so Shelby's saying that's a buy signal, then, right?
Dude, Shelby's bullish as heck. Just kidding. Do not buy this stock. All right. Anyways, Manulife was this is pre-financial crisis. Okay. So Manulife grew its net income by 300% in like 5 years, doing really well. But the bank, or sorry, this is not a bank. It is an insurance company. But it was like a Silicon Valley situation, Silicon Valley bank situation. They over leveraged themselves. They got a little bit carried away. Then they had these massive losses, like negative billions of dollars. And ever since this happened, like if we go take a look at their stock, I mean, the stock still hasn't recovered. It was, a 40, like a $45, $46 stock. It's a $20, $18, $19 stock today. So still has not recovered from 2008. But what's interesting is if you take a look at what the net income has done since 2008, it has continued growing away. And, it's at an all-time high now of $5 billion. So basically this company, I think that I don't know if people are still like turned off by what happened 14, 15 years ago still or what, but it just doesn't seem like this stock likes to get any love. And if you take a look at the price to earnings ratio of this stock now, it's consistently, since the earnings have continued going up, but the price has stayed the same, its PE over time has actually compressed from about 18, 17-ish over here down to, it was about 4.5 at one point, and today it's about 7. So the earnings have just continued growing. The underlying business is continuing to grow. The net income is continuing to grow. It's clearly uptrending, but the stock just doesn't go up. So the PE continues compressing. And at the same time, they've also, is this the right chart right here? At the same time, they've been growing their dividend like massively for about a decade.
I'm assuming that's like covered by their cash flows.
Yeah, by their net income. Their payout ratio is still below 50%. And they've been growing their...
I was going to ask about that quick. I know with the net income number for some businesses, we can't look at it because of the one-time sales and stuff. I'm assuming that the way you're presenting it, we can be confident that's not the case with Manulife, like that their earnings are made up and calculated the same way before SEC changed the reporting rules there.
Yes, but it's a financial stock, so I use net income, not cash flow. So
Fair enough.
It does include, unrealized gains and losses, but it's not enough. As I said, I own the stock. I pay attention to it. It's not enough for a massive swing. But basically, the moral of the story here is net income is growing. Dividend has been growing very nicely and quite quickly too. It's almost a 6% dividend now, and it's still growing at 10% a year. It's a PE of 7. So I don't know. I think it's just cheap. It's one of those cheap stocks from it's just so freaking cheap. It's not a huge position of mine, but it's in my dividend portfolio because I'm just I like the dividend. It's growing. I think it's a cheap business, and I think it's going to grow over my lifetime. So we'll see.